Good evening, everyone. Welcome back to another video, another day, another dollar with your boy. We're going to be breaking down the ES futures contract per usual, like we do every day here on my channel. We're going to look at a 30-minute time frame, go in and look at our daily, and that's really about it. Not a whole lot has changed in the bigger picture since we last spoke yesterday. And today we just kind of continue this grind up, setting higher highs and higher lows, but the trend seems to still be kind of slowing. Now, I'm not saying the market's going to roll over right away, but what I am seeing is that there are little signs and little nuances that maybe the market's getting too long at the moment. Maybe we're running out a little bit of steam to the upside, or we're awaiting something to kind of give us more steam to the upside. So today we opened up right above yesterday's 9Y point of control and right near the high of day in the upper distribution. Remember, yesterday was a double distribution day. We had the lower distribution that was from 84.75 to 72.25, and then you had the upper distribution that was from 43.85.75 to 44.03.25. Okay, we opened up inside of the upper distribution today, pushed up, took out the overnight high, got the previous day's high, but look at this, a lack of extension and acceptance above the previous day's high. Okay, which then led to us turning around, taking out A's low, and then beginning to one time frame down, getting back inside the previous day's range. Once we got back inside the previous day's range and value area, your downside target became the 9Y point of control. And then if sellers wanted to get aggressive, their next targets would have been the single prints and then getting into the lower distribution. Well, they did exactly just that. We had a double distribution day where we held a set of single prints here, where I'm highlighting. We had initially a set of single prints right in this range. And then we created another set attempting to go triple distribution after getting four wide, right? We had four time frames, 1, 2, 3, 4 time frames that traded back and forth through this 93.50. We eventually ended up with another non-wide point of control by the end of the day today at this price point. But we did attempt to go triple distribution day down as we continue to one time frame down in the morning time. Got pretty good extension after taking out the single prints in what was that, F period, right? So we got pretty good extension here, attempting to go triple distribution. If I could get rid of this freaking, all right, I'm gonna leave this line here highlighted at 84.75. Once we got into the lower distribution day from the previous day, once we got into that lower distribution, look how little time we spent down here, right? We did hold a set of single prints in F period, but those eventually got filled, and we had a bit of a V-shaped recovery where we one time framed up the rest of the evening, right? We one time framed down all morning, and then we one time framed up all evening. Just short-term traders, and this is where I got in trouble, okay? Because I seen we had a double distribution day, attempting to have a triple distribution day, and acceptance in the lower distribution is what I was looking for, right? At 84.74 or 75. I was short down here, okay? I was short 84, and then on this push up against the single print fill at 86.75, I added another lot there, and I pretty much stayed in this trade all day long, all right? Instead of taking a very small paper cut once we stopped the one-time framing at 88, and taking a couple $100 loss, and then, looking to trade the rest of the evening, I stayed in that trade and added a few times more. Ended up giving up a total of $1,300 on the day, which is not fun. Paid the piper today, $1,300, and you can't do that after having several good days, several small good days in a row, and then give back a large chunk of change on something as stupid as I wasn't wrong initially taking the trade down here, right? We did have a trend day down, okay, and the next target on the downside was 72.25, previous day's low. I was looking for acceptance down here below 84.75. Once we filled the single prints and stopped the one-time framing and got above 88, I should have been out of the trade. And we eventually ended up just grinding up the rest of the evening. And I guarantee you I wasn't the only short down here that got caught, but I was definitely probably one of the few shorts that stayed in this trade all day, eventually getting out in the last 30-minute time frame of the day, which I'm thankful I did. Otherwise, I would have had much larger loss, as we did try to push up pretty good back up towards the high of day. So we go out with literally just the high of the day, the low of the day, and then a 9 wide point of control. Okay. I mean, there's nothing unique about today, in my opinion. You just go out with you had an attempt at a double distribution day and then gave it up, right? We held it for the most part in the later time frames, and then in period just pushed up, took it all back. And so you only go out with today's high, today's low, and a 9 wide point of control. Now, back-to-back days, we've had 2 wide points of control. And we have not been getting much extension above the previous day's highs. And then if we have been, we've been kind of giving it back. We kind of did the same number back on this day, right? We tried to trend down and then had a bit of a V-shaped recovery late in the day. Today, trend down, V-shaped recovery late in the day. That seems to be a bit of the trend at the moment, but when does that give up? That's the question we have to ask ourselves. Is this market getting too tired? That's why I've been, somewhat comfortable taking shorts where I have been. And today was one of the days where I got stubborn and got hurt. So as far as destinations go, if you open up below today's 9 wide point of control at 93.50 and can't take out the day's low at 75, you'll look to rotate up into that 93.50 and then into the high of day 44.0775. Above that, you have nothing until 44.2325 monthly high, and where the gap starts back from the 17th. Now, if you do open above the 9 wide point of control, can't take out the day's high, or you do like we did today, barely take it out and come back into the day's range, then your downside target becomes 93.50, then 75, then 72.25. And then at that point, you'll be looking to put ourselves back into a balance on the daily. Now let's go ahead and look at the larger time frame here. So here's our daily. We continue to just grind higher after this very large and powerful move. We've been attempting to grind higher, and we've been finding acceptance back within this range, right? This is a very choppy range that we were in just a few weeks ago, before coming out to the downside with pretty good aggression. We're finding acceptance up here at the moment. Now, do we find acceptance of price up here, and then price continues to move higher by stopping the one-time framing down on the monthly, right? If you look at our monthly, I don't have it. Well, just know if we take out that 42.23.25 level, you'll be stopping the one-time framing down on the monthly, and you'll be looking to come out of balance on the weekly to the upside. Now, those are all baby steps, right? Baby step 1 was to stop the one-time framing down in the daily, and then begin one-time framing up in the daily. And then eventually stop the one-time framing down in the weekly, and then begin one-time framing up in the weekly was the next step. And then step number 3 is to stop the one-time framing down in the monthly, and then start one-time framing up in the monthly, right? It's all baby steps. So far, we've completed a few of those. We've stopped the daily and began one-time framing up. We stopped the weekly from downtrending and began putting it into a balance. Next step is to go one-time frame up in the weekly and stop the monthly from one-time framing down. Okay, and we can do that by getting above 42.23.25, getting into this gap, filling it, and then slowly working our way back up towards those highs from earlier in the year. So the only way we stop the one-time framing up on a daily time frame right now is if we take out a previous day's low. So that would mean we'd have to come in and take out today's low and get below the 50-day moving average, it would appear. All right, and if we do that, then we would come back into a 5-day balance or a 6-day balance, depending on how much we give up. And right now, doesn't seem like buyers are wanting to give up a whole lot. as each time we have pushed down, okay, each time we've pushed down has resulted. Each time we push down has resulted in it being bid back up. So with all that being said, ladies and gentlemen, I hope you all have a wonderful day. Remember to use stops. Try not to be stubborn like I was. It's the money that you keep, not the money that you make. And today I did not keep a very large amount of it. I'm learning just like anybody else. This is a constant game that you're learning and evolving and, becoming better at. Even veterans today that have been in this market for years are still learning and trying to improve on their strategies. And I'm just one of those that, I've got to learn. I got to learn the hard way, but I'm going to learn, and I will definitely do better for sure. I'll definitely do better than what I did today as far as accepting a loss. With that being said, I hope you all have a wonderful one. We'll catch you in the next one. See you.